Let's go to the business news now with Nicholas Poynton, who's in our Wellington studio today. Hi, Nicholas. So, new numbers, you tell me, suggest there is a host of zombie companies living on borrowed time. Okay, there's some advice from accountants, but can you start by explaining to me what a zombie company is in the first place?
Yeah, a zombie company, we can probably think about it as one of these companies at the moment that is really being propped up or supported by the government's wage subsidy scheme, these safe harbour regimes, or maybe they've taken on a lot of new debt at the moment. And these latest numbers we've got out show that the number of liquidations for July and August are actually down on the past 2 years, but this is coming at a time where we're seeing financial pressure at an all-time high. So this is causing some real worry among some accountants who think that there are some companies out there that are either deliberately ignoring or maybe they're just unaware of the trouble that they find themselves in. And I guess what they're saying is that the risk here, or the real concern, is what happens when these schemes begin to roll off. A lot of people, they've secured their homes to prop up their businesses, and when these schemes roll off, they could maybe find themselves in some sort of financial ruin, or worse, maybe staring down the barrel of potential litigation. Chartered Accountants Australia and New Zealand, they say businesses out there, they really need to start reading the tea leaves and paying attention to sort of their rising debt levels. Maybe they need to pay attention to the loss of customers, if they're experiencing some delays in paying their bills, missing targets, or getting caught up in the business's finances rather than spending more time paying attention to the business's strategy. Business owners and managers, they're really being urged to sort of get proper advice and to try and limit that damage, sort of save staff and maybe really manage that sort of financial and, of course, when a business starts to fail, their mental health as well.
Let's go to, the US stock market. Their stocks tumbled overnight and that's kind of brought New Zealand's share market down with it. No surprise there, is there?
Yeah, it was sort of maybe, some people were saying it was probably about time that this happened. As people probably heard throughout the news today, the US share market had its worst session in months overnight. That was prompted off by a large sell-off of some of the tech stocks. And when we talk tech stocks, we're talking the real big names there. We're talking about Apple, Amazon, Facebook, Tesla. These companies saw some really sharp declines in their value. And put this all together, the Nasdaq was down by 5%. And it's probably a bit too early to say if we're maybe looking at a Minsky moment. That's when there is a sudden or major collapse in values. But all this sort of smells like a bit of a market correction. There's been a relentless rise in tech stocks at the moment and really share markets in general, and that's been prompted by these record low interest rates we've seen. People getting a lot more returns for their money in share markets than they probably would usually get if they left their money in the bank. There's also a bit of irrational exuberance out there at the moment. I think a lot of people probably fooled themselves into thinking that the prices of these companies could only ever go up. They probably didn't weigh in the fact that they were probably due for a correction at some point. One theory that I have seen out there that I quite like is that since the onset of COVID-19, there's been a lot of people who've really picked up trading. They've sort of seized on these mobile trading apps that have really sort of democratized trading for everyday people. And as the theory goes, that people who are piling into these apps, who maybe don't really know too much about what they're doing, they sort of get taken by the big names out there that they're sort of now allowed to or able to, through these apps, to sort of buy stocks in. They look at Facebook, Amazon, Apple, they realise, I could probably buy a stock from there. And this has really played a really key role in really driving up the value of some of these stocks. The consequences, they were felt on our own share market. We've had a really roller coaster week this week. We sort of dipped really early on. We peaked. We got really close to our all-time record yesterday, and now the market, if I do jump to the market numbers really quickly now, is actually down 1.9% for the day. That's a 230-point drop, which is the biggest drop we've seen since July. It's brought our share market to 11,824. Our dollar is at 67.1 US cents, 92.2 Australian, and 50.5 British pence. And gold, on the back of all this, is up $6 to 1,936 US dollars an ounce.
Thanks, Nicholas. That's Nicholas Poynton joining us from our Wellington studio.